Hello, I'm Wayne Heili, Managing Director and CEO of Peninsula Energy. Peninsula is a uniquely placed junior uranium mining company. I say that because we have contracts and a long-term contract book that allows us cash revenues. But more than that, we're a junior uranium company that's been in production and has been preparing to return to production. We're conducting a field demonstration on an improved process. We've had significant developments in that field demonstration, which we'll share with the market today. So I'm pleased to be joining with you here on Crux Investor with Matt Gordon.
Fantastic. Long time no speak, Mr. Wayne Heili. That's a nuclear joke.
That's a great uranium joke.
You need to be in the nuclear uranium space to understand that, or very clever, or both. Look, you saw the press release with regards to the demonstration. I think the market's been waiting for you to come out and say, we've cracked it. Have you?
We have. We feel very comfortable that the low pH chemistry at the Lance project is the way to move forward. Our project was built with alkaline chemistry, as every US ISR project has since pretty much the dawn of time. But we've moved towards low pH chemistry, and we've been demonstrating that. Our operations, our field demonstration operations, have now been running for over a year. We've seen the results. We see the uranium tracking upward. We're getting good uranium recoveries from the project. We're very satisfied that we've come to the uranium chemistry, the extraction chemistry that we need to move forward. So now the demonstration will continue. We're going to continue to look at the full uranium recovery curve. We're going to continue to learn from the operation. We've had significant learnings in other areas than just chemistry, and pattern designs and how we install our wells and how we target the ore underground. So we're very pleased that we've spent the last year of our time and some money in this, proving that the low pH chemistry will work and learning how to make it work best.
Okay, so the low pH works, great. Where has it moved you from and to? What can you tell us in the sense of how much better is this than what you had before?
So we're doing the demonstration to get the full recovery curve from the formation, but the laboratory tests that preceded this demonstration were real clear indicators that this was the right direction to go. In the laboratory tests, we could take the recovery rates from maybe 50, 60% and sometimes 70% from the alkaline chemistry, and we could elevate it up above 90% recovery. In the field, we probably won't see a full 90% recovery, but we're going to see a similar trend in much higher uranium recoveries from the field. The uranium does come out faster. It comes out at greater concentrations, and we get more of it. And that's why we were making that transition. That's why we wanted to do this. And now we feel comfortable that the chemistry choice was the right one.
Okay, so the chemistry choice is the right one. When do we, the public, the shareholding community, get to see the economics around this? You're saying, obviously, we're going to be able to produce uranium. Great. Can you produce it economically? When will we know?
Yeah, well, we still have a feasibility study that was published in 2018 that's holding pretty true. But we will take the learnings from this field demonstration when it's complete and complete an updated feasibility study. So, that's why I said we need to see the full uranium recovery curve, because we'd like to base our feasibility update on the learnings and the full curve from the field demonstration rather than from the laboratory. So we're talking about 2022 second half probably for an updated feasibility study.
Right, you did an SPP back in June, sort of top up from the previous raise when you kind of retired the debt. What are you going to? Are you going to have enough money to get to that point next year? Or will you have to top up again?
Well, that's why I said we're uniquely positioned as a junior uranium miner. We have uranium sales ongoing now. In the first half of this year, we sold over 200,000 pounds. The revenue came in early in the third quarter. We realized $3.5 million from that sale. We just completed another sale of about 200,000 pounds. Another $3.8 million coming into the company accounts net from that sales transaction. Yes, we're a company that's really essentially self-funded, and that's why we're unique on the junior front. We had $6.5–7 million in cash at the end of our last reporting period. We've had multiple sales and have multiple or significant revenue coming in the second half this year. We do have the ability to continue doing the field demonstration and all of the preparatory work that we are doing now without really considerably changing our bank account.
But why do the SPP back in June then for $2 million?
Right. Well, what we did in June was a little unique. We purchased an inventory of uranium. We bought 300,000 pounds of uranium as a working inventory for our company. We purchased that uranium at about 31 and a quarter per pound. Today, that's worth almost $41 a pound. So I think we were in the market at the right time, anticipating a need to have working inventory. When you're dealing with customers, when you have accounts that you have to service, you have to have some working inventory. So we went to the market, we raised a little bit of money, a discrete amount. We didn't go all in on uranium. We weren't buying uranium as a speculation on the price, but we had a good sense that we had Sprott's Uranium Trust coming into the market in the near future, and that the time to do this was then. And I think that hindsight has proven has proven that to be correct.
Okay, fine. So you're pleased with the field demonstration. You must have had a lot of inbound phone calls of saying, congratulating you. And did you get one from Paul Goranson?
Paul and I talk all the time, usually in group calls. Nothing, look, we're friends and he's doing a great job over at Encore. But I'm not going to claim that Paul calls me up and pats me on the back every day. Right.
And I just wondering how interested he was in your results, because obviously there's something going on out there, which is, and maybe we should talk a little bit about this. They've obviously announced their, I guess, takeover, acquisition, merger. I'm not quite sure how they're positioning it basically, but they want to do a roll-up of ISR companies. Are you in discussion with them?
If we were, I wouldn't say. And if we weren't, I wouldn't say. Matt, it's a great question, but it's not appropriate for
comment. I've got to ask. That's because that's what people are wondering. So in the fullness of time, we'll work out whether you're going ahead with this project or, more likely, well, not more likely, a roll-up is likely. Right, so let's talk about this, actually, because there's a few new players in the market. We talked about this last time. There's always going to be dusting off of projects, a few new players kind of come into the market who don't have the history, the stature, or the track record of ever having worked in uranium, let alone produced uranium, right? And that was fine last year. Do you think with this impetus, at the beginning of the year when there was a bit of a resurgence of interest, do you think with the emergence of the Sprott Physical Uranium Trust, which seemingly driving the spot price from 32 just 4 weeks ago up to, well, nearly best part of 41 today, at the end of this week, do you think that companies who are just, dusting off those old projects are going to be able to raise money off the back of this, generalist interest in the space? Or do you think at some point they're going to be found out?
Well, they'll absolutely be able to raise some money. I think that goes without a doubt, because a rising market lifts all boats. But the market has gotten to a really interesting point with, a 30% increase in the price of uranium in the last 3 weeks, less than a month. Sprott, as you said, driving it. We're going to find out very soon who has what it takes to produce uranium. We're going to find out, who's been doing their homework, who's been doing their preparation, and who's just talk. It takes a very long time to permit an operation and to construct it. And it takes an additional amount of time to get it right, to get production right. There's been, Peninsula is one of those companies. We have the facilities, we have all the permits, and we've been spending the time in the past months and years preparing to put our best foot forward into production. So I feel very good about where Peninsula is. We have the operational team, we have the right people in place. We probably have more employees as a company than pretty much anybody else in the US space right now. Because we're running the field demonstration, we have a full operational team who's cutting their teeth and who's practicing their trade. When it comes to putting the project back into production, I'm confident in the team that I have today. I don't have to go higher. So like I said, I think Peninsula has the production chops. I think we have the experience, and I think we have the track record with the people that we have in place to really move this project forward fast. So for investors, the time might be now to start considering, are you really just interested in developers, or are you interested in people who are going to be able to capitalize on this market as this market develops?
Well, let's dig down on that one, okay? I want to understand why you think it's important that the company can get into production. So far, the last few years, last 10 years, well, the last couple of years, it hasn't really mattered, quite frankly. Why now? Why is now important? Because spot prices being driven up, it's still nowhere near the price that all companies are going to need to be able to get back into production, or at least raise the capital to be able to get into production. There are no contracts being signed. So why are you saying now is the time to look at producers or could be producers versus exploration or development plays? Because
all of the companies who've given an idea of what their incentive price are soon going to be seeing that incentive price marked in the market. So what are you going to do? Are you going to eat your words, or are you going to produce your pounds? That's why, we have to make an investment decision. We haven't made that yet. Don't get me wrong. But we know that, what price point this mine can be profitable, and the investors expect that of us. They expect us as a junior company with a production operation to be on the front foot and putting that project into production as quickly as we can when the market is right. And we can do that. This is a company that can put production on the table for sales, in the near future. So you'll see that. And yes, you're right. In the past, we really weren't rewarded for that attribute. But everybody's been betting on uranium prices coming up, and now today we're seeing it. If this trend stays, if the price continues to rise, if Sprott and their Physical Uranium Trust continue to pull the mobile inventory out of the spot market, we're going to see the uranium price continue to rise. I don't think that there's a limitation with Sprott. I know that they initially issued a papered a $300 million ATM, and they're probably considerably well through that now. But look at the influence that $200 million of investment into uranium made in the market. It pushed the price 30%. They've said publicly, we'll use this up, and if there's still an appetite, we'll issue a $500 million ATM. Look, they have a feedback loop right now that's working really great. They buy uranium, they drive the price up. That raises their asset value, their net asset value of all of their assets. And that means investors are interested in the revenues that their fund is generating. So more investment comes into the fund, they buy more uranium, they pay a higher price, they raise the asset value, and it's rinse and repeat. It's do it over and over again. Big question, when will that end? How will that end? Look, Sprott's got a fundamental responsibility to their new investors to maintain that price. And I don't see any reason why, with them coming into the U.S. and listing in the U.S. and with the access to capital that they found just by rejiggering the structure of the Uranium Participation Corp. Look, they're doing a wonderful thing. There's no reason why the way it's working right now has to stop. They are buying up uranium. They're willing to pay more because they're rewarded for paying more. I can't do that. I'm not rewarded for paying more for uranium. I'm going to be rewarded for producing uranium. This is a really exciting time in the market, Matt. But it really is coming down to, we're going to find out who's really ready to go.
So, okay, let me be clear. There's a few points along that conversation there. So we say exploration companies, we need them because we need to find more uranium, okay? Fine. But development companies who are near-term producers in their own words will need to step up to the plate and show that they are. Now, I had an interesting conversation with John Borshoff a couple of days ago, and today actually, where his hypothesis is it doesn't matter what spot price gets to for some of those near-term development companies. It doesn't matter if it hits the number that shows in the scope. So they technically don't have the competence in-house to be able to produce. That John Borshoff's words, right? So he said that's a real concern. The skill sets aren't there, the experience isn't there, and this isn't a case of whipping out a recipe book and going, well, here's how to, right? It doesn't work like that.
I'll agree with that. I've been in this industry too long, producing uranium for too long to think that it's just as simple as saying, do what Wayne does.
Yeah. So tell me this then. So how does a utility, because these near-term developers are going to be saying, hey, spot price is where we need it to be. I think we can have contract discussions with utilities. A utility walking into a company like that, which has spent a lot of time marketing and promoting themselves in the market, and they may have achieved great things in terms of share price and market capitalization. The utilities don't care about that. They go, can you produce uranium consistently and at the volume you are telling me that you can sell to me? Yes or no? That's a real simple question for them. The real simple maths. Yeah, can you do it? Yes or no? And if they don't believe the company can do that, they don't get a contract. Utility moves on to the next conversation. So do you think that there are near-term development companies, which are near-term producers, according to them, that are going to have to rethink the way that they come at this? I mean, where do they go to get the necessary skills to be able to produce? How long does that take?
Well, absolutely. They have to start thinking about that today, because theoretically, we're already at a spot price where these companies could produce. Most companies won't make a production decision based on the spot price. It's just not reliable. So you point to the contracts with utilities. Utilities look at companies like Peninsula through the lens of a risk profile. How much risk is it, for me to take a contract with them if I'm dependent on those pounds, right? They might make a contract with us because we're offering a price that's outstanding, and they're not dependent on receiving those pounds for the reactors. But most of them are looking at us and saying, can you produce? Do you have a track record? Do you have a project with a track record? And then they'll decide to do the contracting. So, you're absolutely right. There's no doubt that the utilities use that lens to view the junior companies, and not every junior company has the team and the track record to pass that test.
But that becomes a sort of nil-sum game, really, then, in terms of that conversation and the leverage, because another company could have, right? You can either produce or you can't, and if you can't, valuations tend to get hurt a lot. And so if you need to bring those skills in, so do you expect to see a lot more M&A, given we seem to have got to the sharp end of the stick? It looks like we're going to have more of the same, certainly through to end of the year into next year, from Sprott's behavior, their ability to raise money, continue to attract interest. Is this an opportune moment for roll-ups to happen? In which case, obviously I joked about Encore earlier, but the reality is this could be a really good moment for someone to come and do that. Maybe Encore has got the strategy right.
Yeah, I think this is a good time to consider mergers, acquisitions, bulking up. Putting two teams that are like-minded, but also have variable skill sets together to make one stronger company. There is going to be more M&A activity in the markets in the coming months than we've seen. It's because it's been really sleepy for a long time. And the reason it's been sleepy is that most of the companies say, I like my portfolio right now. I like what I have. I have a project that can be put into production or two that can be put into production. And I'll wait until the price of uranium goes up, to see what valuations we get for it. Not every junior uranium developer is going to become a junior uranium producer. So, it takes a lot more skill to take a project from conception to production than it does to take a project from conception to a delineated resource.
Okay, so again, investor hat on, because if I look at that, I think there are some companies which look good but don't have good assets, and then there are other companies which actually have good assets, but the management team obviously not in a position through lack of experience or knowledge to be able to monetize that. So there's all sorts out there. But what concerns me with regards to this timing thing, this pointy end of the stick, that is, I think we've got a period of time before Sprott Physical Uranium Trust lists on NYSE, where they continue to drive the market, raise the money, attract more and more interest. There seems to be a period there where investors can take advantage of this. Everyone's seeing a spike in their share price. You guys have benefited from that. But is it once it's listed on NYSE and all this new money's come in, is that a moment where perhaps people should be thinking about maybe selling off a little bit? Will it have got too frothy by then?
Every investor has a different strategy for, when they're going to take the money off the table. So that would be an interesting point. But I don't think that is the point, because once Sprott has access to a deeper pool of money, all they're going to do is grow their inventory and grow their base and continue to do what they just started to do. I think what they're doing today is just in the infancy, and the effect they've had has been pronounced. A lot of people are saying, why didn't I think of that a long time ago? Why didn't we go out and do that? Congratulations to Sprott for their excellent execution on a concept that is just self-fulfilling. Like I said, the positive feedback that they get, the more they buy, the more money that comes into their fund. It's an incredible cycle.
But there's got to be an end point to it. It's a small market.
I don't think we're even close. The price of uranium today is not what the price of uranium was in 2011. 10 years ago, the price of uranium was close to $70. Today, we're reveling in the idea that we saw a $10 increase to $40. But the reality is the price of uranium belongs up in the, above 50, up in the $60, $70 price range. It belongs there, to incentivize existing producers who have projects idle to re-up their projects and get them going again, to incentivize current producers to up their production rates from their current facilities, to get the uranium production industry out of the malaise that it's been in the last 10 years because of low prices. These low prices are really, low prices, $20, $30. Everybody said it's not enough to incentivize production. $40 is moving the right direction. But to me, and I think the folks at Sprott recognize it too, the incentive price for production is north of 50. It's probably closer to 60. That's when you're going to start seeing existing producers put projects back into production, or guys with developed projects. And then, then we can bring in some new projects too. So, the price has to not just get to 60, but stay up there. We have to be able to write contracts at that price to ensure revenues and returns on investment for putting the projects back into production. And then we've got to go out and redevelop a talent pool. this industry's been in decline for too long. The talent pool's been very, very heavily depleted, and just not enough of us have stuck around, to see the end. It's not easy. It's not easy to look at a price that doesn't incentivize production every day, and people have moved on. Can we get them back? Can we get new people into the industry? It's going to take, rebuilding of the industry. It's going to take time.
Okay. Are you not at all concerned? But and I appreciate you're a beneficiary. Peninsula's a beneficiary. A lot of shareholders of uranium equities are beneficiaries of it. Are you not concerned that you're looking at it through rose-tinted glasses? You've kind of got a sort of synthetic financial instrument that's come in. It's helped things out. It started moving things along. At some point, though, cracks have got to appear, because we don't know the long-term effects of what's being created here, do we?
No, we don't. But it is clearly a new day, and clearly a new opportunity. This is I am happy with the way things are developing, but I'm also always guarded and cautious. Those listeners of yours who've listened to me in the past know my conservative nature. Recently people who've seen me, and spoken with me said, "Well, you're really upbeat. What's changed?" I said, "Well, we saw this coming. We saw when Sprott said that they were going to do this, that this could be a real game changer." The Peninsula management team was reactive and front-footed on that. So we went out and got some uranium. We positioned ourselves well for what we thought was going to happen. Our lens on this is that we did the right thing. So look, no, we don't know the end game, and all good comes to an end at some point. But I'm of the mind that the stage is set a lot like it was in 2005, where we have the opportunity for a significant bull run, and we may just be at the start of it.
Right. Are you okay? Fair enough. We don't know what we don't know at the moment, right? And we all welcome this, and as shareholders, we welcome this for whoever you're invested in. It's great after this kind of period of malaise and disinterest. Again, I'm just going to go to market commentary, because everyone's just kind of very upbeat and flailing their arms around. There's a lot of promotion and a lot of upbeat conversation, we'll call it. And then there's some, people who, urge a little bit of caution, welcome it, but urge a little bit of caution here. So, with regards to pricing, we've seen people bandying $200 around, right? So, and I think if you said that a year ago, you said that person's mad. But do you think that is a distinct possibility here because of the supply component, the very thing we were talking about earlier, the fact that if you look at people like the trade techs, or even the WNAs of this world, are looking at the company's projections and discounting a significant percentage of that as a cumulative total. They're discounting a significant portion of that because they don't believe, like you are intimating, you don't believe a lot of these companies are, one, going to be able to get into production, and two, be able to produce at the rates they say they are. So that should create a supply squeeze. So maybe $200 isn't so crazy.
It's possible. I don't have that crystal ball, but I know that the supply in the uranium market is thin. The available supply today is thin. We have significant producers who said they need to continue buying to supply their contracts. Their contracts may be market priced, so the buying that they do is going to,
But that's COVID dependent. I'm talking about looking at. Let's assume we hopefully resume some.
But looking out into the future, the current producers are committing their inventory. There's not a lot of mobile inventory coming into the market, so it seems to me that the uranium market has a lot more upside than it does downside today. Where it stops, I don't know. But we know that the effect of $200 million on the uranium price. $200 million of investment into uranium inventories had a 30% increase in the uranium price. $200 million in the big picture isn't a lot. Sprott has the potential to bring a whole lot more money to the table. Yellowcake can do the same thing. Sprott doesn't have to be the sole actor in this. A lot of people are the beneficiary. We'll see where it goes. But supply and demand has been fundamentally difficult. We know that primary production has not met primary demand for a long, long time, and that inventories and secondary supplies have been filling the gap. But we also have seen very clearly that inventory is declining. Inventory in the hands of producers, folks who can sell it, is declining. Inventory in the hands of utilities has declined because they've done minimal amounts of purchasing. So the stage is really set for a strong run. And that's why I said the upside is far greater than the downside today.
Yeah, and it possibly changing the dynamics of the sector as well. We're seeing people carry trade being impacted. We're seeing all sorts of traders usually clipping their little piece of any transactions. So mobile inventory is reducing for sure, but the real players in this, and always have been, is utilities need to step up and they need to come to the party. We've been saying that for years now. They don't look too shook up about this. Are you seeing a lot more, RFPs coming out? Are you seeing more conversation?
No, not yet.
Right.
It's too soon. I think they're doing the usual, let's wait and see, approach to life. They have an adequate inventory to keep their reactors running. They have agreements to continue to see a supply come in the front door, but they've always got more that they can purchase discretionarily, and they have minimal inventories now. So, I just don't think that the pressure's on for the fuel buyers to be buying today. But we all know that a huge number of legacy contracts have rolled off in the past couple of years. That's why production is down, because producers are no longer incentivized by legacy contracts. And the new contracts are not priced where the legacy contracts were. So, producers have been signing contracts, and they're generally market-based contracts on the anticipation that the market's going to go up.
But how have players, if I look at Exelon, right, they recently announced, I think some legislation suggests that they're actually going to, I think it was two specific reactors they were talking about, but they've played the game for the last 2 or 3 years of actually, we're going to let those things, end of life, we're going to let those things go. We've got other forms of energy that we're going to focus on. This isn't one. Is that just part of a game of trying to extract capital from whichever state they're operating in, get government finance, and it's all fun and fair at the games, right? Well,
no, the reality was and is that the energy markets in the United States were not rewarding baseload electricity generation like the nuclear power plants, and the utilities needed the support for their type of electric generation, which everybody agrees is the right kind of generation today. Nuclear has really come a long ways in the eyes of public acceptance and the embrace because of our drive to reduce carbon emissions and decarbonize our electricity grid. Nuclear is a key player. So, that you have. But
renewables asset was picking up the spare cash. Renewables were getting the subsidies. Well,
exactly. Right? Nuclear was not, and nuclear says, we need this to keep our heavy invested assets, these nuclear power plants, running and generating clean, green, and reliable electricity. And Matt, that did nothing for the fuel buyers. All it did was introduce uncertainty for the fuel buyers of those utilities. They didn't know if they had to buy the next reload for those power plants or not. Looks like Illinois is going to support Exelon's continuation of the operation of those reactors. And that's a happy resolution because everybody gets pretty much what they want. We get the nuclear power, the clean footprint of nuclear power and the reliability of nuclear power. And now the fuel buyers can come back with a little bit more certainty and say, okay, now we know there'll be demand for these reactors in the future. So let's.
But that's why I asked the question, Wayne, because it struck me as like you framed it as they were unsure, they were uncertain as to whether they should be, buying for these reactors or not. To me, it kind of scanned like, hey, I'll tell you what, we're gonna let that run down. You're not giving us the support, so all the money's going over to renewables, for subsidies for those guys. We need it over here. If you don't pay attention, the lights are going to go out. That's what it kind of felt like. It felt like negotiation.
It wasn't scamming the government. They really didn't buy. They really wouldn't buy for reactors that they didn't know if they would be on or not. The decision as to whether to continue operating the reactors was contingent on some form of support. Once that decision's made, now the fuel buyers can finally act. And that's really what we care about is, when we talk to the fuel buyers, they said, well, look, we don't know if we have an excess of inventory or a shortage of inventory because we don't know what the future of those reactors are. So whatever, if it was a game, if it was, something more, it impacted the behavior of the fuel buyers. And now the fuel buyers have a green light because they can project their needs better.
Right. Okay. Wow. A lot going on at the moment, isn't there? A lot going. Well, there always has been. We're into our, 80th weekly uranium show on cruxinvestor.com, and there's never been a quiet week. There's always something. And right now it's very, very exciting. People are obviously very excited about SPUT and what it's doing for the marketplace. You guys are the beneficiaries of that. Be interesting to see how many people take this as an opportunity to raise some additional capitals because you never know what the future holds. Lots of M&A. And your announcement today, you're back in the game. You're positive. I think people were looking to hear positive tones from Mr. Wayne Heili. We're waiting. So are you positive? Is that the message to the market?
Well, yeah, we feel very comfortable with, we being Peninsula, feel very comfortable with the chemistry that we've selected for the project, with the progression of the field demonstration, with the valuable information we've learned from it. And we're glad that we made the decision to do a field demonstration a year ago rather than waiting until now to put our money down and start to figure out what's the optimal way to produce uranium from our facility. Once the market's up, you've got to be ready to act. You've got to be ready to put production on the table and sell it. So that's what we've been doing for the last year. We've kind of been in the doghouse because we've been doing things that others haven't. But we believe that the things we were doing were the right things for our shareholders, and the outcomes today are showing it.
And to your point earlier, you're saying by doing those things and by getting into production, you and the handful of companies who really will get into production will be the beneficiaries of what's going on in the market at the moment.
Well, look, the uranium renaissance period, 2005, 6, 7, I lived through it. There were a bunch of companies that were promising to become uranium producers, and they found out what the timeline is to license, to develop, to put a project into production, and to get that production up to a high successful rate. Most of them missed the peak market, but they were able to raise some money to put the project in, and they got the project up in time, just in time to idle it. Let's be on the front foot. Let's be ready to put the project into production at a time that the market's rewarding it. Then you'll have a long-term success.